This is a recording demo, a live example of a chart that was for December 7th of 2010 in the euro currency. And I would like to show you the TriggerPoint software that aims to capture springs and upthrusts in any markets on all time frames. And the one I decided to show tonight, for example, because it's one of my favorite time frames, is the 60-minute euro currency, which is a vehicle of the European currency. And I wanted to show you an example of how we use our TriggerPoint software to make a particular trade. Yes, because what's very important is that we have a background that shows weakness when we are trying to look for a sell opportunity. In an upthrust, it is a penetration of a previous high that is a resistance high. So what we like to do is we like to see weakness in the background, a particular high, a weakness from that high, and then the market to go back and retest that particular high and make a higher high. It's probably best if I go through the example with you and you'll be able to see this more clearly. As you can see, our TriggerPoint software, we have red and we have green. And the red corresponds to the down moves and the green corresponds to the up moves. So as we can see from this chart, we want to look at the left side of the chart, which will give us background on this particular chart. As you can see, we have the euro currency. This is 1 hour up here. As you can see, we have a red situation here where the market is coming from weakness. We have a wide bar that indication of selling. Selling because it's a wide bar, closed on the lows, and this particular volume increased. On the bottom here, as it's shown here, is volume. We know now that the market is in a weakened situation because we have shown that the market has broken on fairly high volume, which is selling pressure to the markets. Wide bars to the downside, we want to see after they move down, we would like to see the reaction back up high to see if we can look for a sell opportunity. So as we see, this market basically went down in 1, 2, 3, 4 bars. It went straight down basically before it's some type of reaction, and then 5, 6 before we see the absolute low of the particular markets. As you can see, it took probably over 20 or 25 bars to go up and to retest this particular high. As we can see from this particular high, we have a low-end close. This low-end close is basically stopping action to the market. It is a fairly wide bar that closes on the lows. This is very important because when we go back up and retest this particular high, it will set us up with our upthrust trade for our TriggerPoint software. As we can see, 1 bar down, then it takes 1, 2, 3, and on the 4th bar, we happen to have a situation where we have a situation called an upthrust. As you can see, the market penetrates this high by several ticks, and we get confirmation by the low-end close of the markets. This is what, in Wyckoff terms, we call an upthrust in the markets. A higher high from a previous high, and we'd like to see that market close on the lows or 2/3 of the range lower, then the lower third of the range. What also is very key is that we have follow through. In the next bar, we certainly have the follow through, and the TriggerPoint method in catching upthrust is a success at this particular point. When we sell this particular market and we get a low-end close, our stop can be about 10 to 15 ticks above this upthrust high. So if this particular high is 134, as you can see to the left of the screen where it says high and low, we can put our stop basically at 1 134.16, and the trigger would get us into the markets at the low close here, if you waited for the confirmation, and that close here we see is at 133.62. So we like to put our stop above the up thrust high. As soon as we get confirmation that this up thrust is a success, we can now move our stop back up to the up thrust here at 134.01. Place that stop one tick above it. You can use your discretion how you'd like to do it, but it should not make a new high after confirmation of the up thrust. What's key from an up thrust is continuation to the downside, which we do have. And the market continues to lower, and we are never in danger. Once we make a lower low, we can place our stop above the last reaction high. So once we make this low here, we can now put our stop here. And this stop will be approximately 132.77. As you can see to the left of the screen, upper left hand in the screen will give you the high where it is. It's 132.77. A couple ticks above this high here after we make a lower low. So as the market is going in our favor, we do want to try to eliminate as much risk as we possibly can by lowering our stops. As the market continues lower and making lower highs, probably lower lows, and we get down this level, we can now put our stop here at the right now above at the 133.14 level. And if we take our worst possible fill of this particular bar, we are short from 133.62. So at this particular point, we are locking in approximately 50 points of profit. As the market continues lower, as you can see, there's really no reaction to the upside, and this market continues weak. This here is a possible stopping action bar, indicated by the green. It gives us reaction, but if you notice, the volume on the bottom here is very light. The volume here on this light means that there's no demand in the market. There's a lack of demand in this particular market, and it's not a situation where we want to liquidate our position. As the market continues to go higher, it fails, and it makes a lower low. At this point here, when the market now is at the 133.20 area, again, you can see that on the left side of the screen, we can now move our stop all the way back up to this reactionary high here, which takes you to, let's see if we point up there. It will take you under, let's see, put over here, about the 132.80 area, which now locks in 80 points of profit. As we make this particular low here, and we continue to go low, we see no volume and wide price action to the upside, which would make us liquidate our short position. We can allow the market to take us out as long as we do not see any buying in the market. And buying in the market would be a wide bar to the upside with increased volume. And we do not see it. We do see a particular bar here that is an increasing volume here and high volume, which may be some type of indication that we have some type of reaction. As I said, a wide bar with a high volume could be some stopping action. At this point here, our stop would be here anyhow, and it probably would take us out here if this was indeed a live trade at the time. So it probably would get us out if we raise our stop above this area here. It probably would take us out unless you were fortunate enough to keep your stop up here. Again, that's discretion and how far you want to keep your particular stop. But I would like to keep it over the last reactionary high. So this way, if it makes a new high, we want to be out of the market. So I hope this little demonstration does help your understanding of how we trade the TriggerPoint software with an upthrust. We are always looking to try to be in the direction of trend for the majority of the time that we trade. There are instances where we will buy a spring in a market in a downtrend, and a spring is a piercing of the downside support that closes back above support. But those are more for scalping situations and short-term trades versus for long-terms, because springs will fail and make new lows in downtrends. An upthrust is simply a penetration of a resistance area that fails, like we have our trigger point with our crosshair right here, which beautifully illustrates. And then the key is the continuation to the downside and follow through. So I hope this little demonstration is very helpful, and hope to do more illustration and show you the setups for trigger points. Have a nice day, everybody. Thank you.